Check, please.
Hey, welcome back to Everything Money. I'll be honest, this channel, we could do every video about Tesla and we get a bunch of fanboys to start loving us. We'll just tell you what you want to hear, but we don't. We find some undervalued companies that maybe you not even have thought about it in purchasing. So our fans ask us all the time to analyze more 8-pillar companies. So here they are. 3 companies you are boring, you probably don't love. We're going to look at them right now and see if they're in the buy range for a value investor. We'll go through the financials and show you the stock analyzer tool right now. Paul, give it to us.
All right, so these are 3 8-pillar stocks. Full disclosure, I own Smith & Wesson, SWBI.
I forgot about that.
I do own that. I'm down a lot on it, about 20-25%. I don't know if I followed my own process on that one. I liked the numbers so much, but I wasn't like in love with it. But I'm still going to stick onto it because I do believe that the future of guns is Smith & Wesson is still going to be fine. So let's go to them. Let's go to our 8-pillar software and more on that later and how you can get it. So let's go to Smith & Wesson brands, the 8 pillars. So look at this. All 8 check marks here. Buying back shares, low debt, growing free cash flow, low price to free cash flow, low price to earnings, high return on invested capital, revenue growth, and net income growth. All over the board. You sit there and say, Paul, of course I got to buy this. Well, not necessarily. Let's look at the income statement. The revenue growth is very consistent here, but it also fell. That's the problem. So you look at it now and go, consistent here, then it fell, and now it's back up again. So that's why I want to be very conservative with this company. You need to understand, why did it fall from $870 million down to $575 million? I don't know. When you're just looking at it from this, you have no idea. Now you have to read 10Ks, go look at things, but I also made conservative assumptions in our stock analyzer tool that made me feel comfortable buying Smith & Wesson.
It seems like gun laws in some states are loosening. I think someone said in Ohio they're proposing getting rid of the concealed carry. You and I can just go get a GAT and just turn it sideways.
They already did.
What is a GAT exactly? Is that a specific kind of gun, or is it a...
I don't know. You know, one of these...
Rat-a-tat-tat-tat-tat.
Yeah, like Home Alone.
That's the way it is.
The Home Alone, the gangster in Home Alone, that's you at your house.
So I don't think guns are going away. For one reason is it's part of the Second Amendment of the Constitution. And every lefty in the world who talks about how they defend the Constitution and wants to get rid of this one, I just love so much. But I don't think it's going away. We still have a large gun community. They're very enthusiastic about guns. And we have Smith & Wesson brand, which is a very, very popular brand that's built a lot of credibility for themselves. Have they not?
Yeah.
So I think when it comes to brands, Smith & Wesson has a great brand name. I like their balance sheet. Here's why. Their total current assets, which is basically cash and all cash equivalents, is $333 million. Their total liabilities is $156 million. So they can pay off all their liabilities plus have $100 million left over. And this is a company that's currently selling market cap for $826 million. So really, you're buying it for $826 minus the $180 million left over. So you're actually buying it for $640 million. That's the way I look at this company. Their 5-year earnings. The last 5 years, they've made, what is this, 60, 90, call it 100, 140, and 280 is 420, $80 million a year. So you're buying it for 8 times 5-year profit. Now, this last year was a big jump. But even with that, with $1 billion in revenue, they should still be able to make 10% or whatever it is. And I look at that going, okay, that you're still paying 6 or 7 times earnings on it. And I think the downside risk is low because of all their cash on hand and inventories versus their total liabilities. And they're buying back shares. Look at their shares. They had 65 million 10 years ago, shares outstanding. Now they have 48 million. What does that mean? For those of you who don't know, when you buy back shares, you're getting a bigger and bigger piece of the company. If a company has 10 shares outstanding, you own 1, you own 10% of the business. If they buy back 2 shares, they now have 8 shares outstanding. You still own your 1. You now own 12.5% of the business.
This isn't a transition of ownership. Do they just vaporize the shares that go away?
When a company owns the shares, they don't include it in shares outstanding.
Oh, I see.
So it basically retires those shares there. But then they can go release them and make some more shares out there. But once they put these shares in there, it's gone from the market, from the market.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of $1,000s, made the software. You get 30 years of financial data. You get access to Seth Moe and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
Do you want to pull up Stock Analyzer for
Let's do it.
Smith & Wesson?
Every investment's the present value of all future cash flow. So we created this that allows you to tell you what you should pay for it. So I'm going to do a 10-year analysis on Smith & Wesson because I believe they'll probably be around for 10 years. I'm going to be very conservative. I'm going to go 0% revenue growth, 2% revenue growth, and 4% revenue growth. Profit margin. I'm not going to do last year's profit margin. Remember I said before about 10 or 11%? That's what I'm going to focus on. But I'm going to go 8, 9.5, and 11% profit margin. Free cash flow margin, 12. Let's go 11, 12.5, and 14. PE. I'm going to go 8, 10, and 12. 8, 10, and 12. 12.5%, because guys, the desired return should factor in the fact that you're doing an individual stock versus an ETF that's making you 9 or 10%, and a margin of safety. The higher return, the lower the price. Hit the analyze button. It's $17 right now. Basically every level I have except for one, it's a buy. So it's between 15 and 20 on the low side, 30 to 37 on the high side, and in the middle it's between 20 and 28. I'm a buyer. I bought it at 20, so I'm down 15, 20% on it right now. I didn't realize I thought it was down to 16. So I was actually pleased to see. I'm like, oh, it's $17. That just shows you how I never look at the stock price. I literally never check it. I bought a company, and I will keep track of the company, and if things fundamentally change, then I'll worry.
This is sort of the same way you've compared this to real estate, right? You're not constantly checking the value of your home or a duplex. You're right. It's like, yeah, if you make a great decision, you don't really have to check the price on a daily basis. You've done. My
theory is if I make what I think to be a good decision based on a good process over 30 stocks, over 30 years, I will do well. They'll fluctuate in price, but if I were to buy a set of cash flow that I think is going to grow over the next 30 years, and I pay a reasonable price today? If I had a room of 100 business owners and I said to them, guys, if your profit in the next 10 years quadruples, who here thinks their business value would go up? Everybody raise their hand. That's what I focus on. Now, if you overpay for that business, the value won't go up compared to what you overpaid, but the intrinsic value will go up. Just because you pay $20 for a stock doesn't mean the stock is worth $20. My goal is to pay $20 for a stock that I think is worth $30. And I do think this is a $30 plus stock because I was being very conservative in my revenue growth numbers, high side of 4%. Now, what do I really think is going to happen with Smith & Wesson? This is what I really think is going to happen. 3, 5, and 7. And that's where I think the stock is. I do think it's all day low. I think it's somewhere in the high 30s, low 40s. Now, Smith & Wesson is not a company that I'll probably own forever. Once it hits my price targets, I'll probably start selling it. It's not like a Microsoft or Google or something like that I want to own for a long period of time. Because, I still worry about the hypocrites out in California who, like Nancy Pelosi, who probably have 18 guns in her house to defend herself, but doesn't want you to protect yourself. Awkward.
Like your Brazilian wax, Paul, people are in love with this Brazilian iron ore mining company, Vale. Can you walk us through the 8 pillars on VALE?
Yep. 8 pillars. Now, here's the deal, guys. This is a commodity-based business. This business is based on iron ore prices. So what I would do is I would look at historical iron ore prices. I'd pull up a chart and all the data going back to 2007. Look at that chart. Now let's look at the chart of Vale from 2007.
I see. Almost identical.
I mean, it's very similar. Yeah. It's very similar because where iron ore prices go, the company's revenue is going to go. That's where the profit's going to go. So if you want to own a company like this, don't get caught up in the 8 pillars of it. Look at iron. Look at the profit and revenue of the company over long periods of time and buy based on that. Buy based on historical averages for commodity prices. And I wouldn't buy at highs. But that's when things look sexiest. You want to be buying when you go, oh, listen, iron ore prices are down 80%. You know, in Richer, Wiser, Happier, Chapter 2, we just did it for our book club for our exclusive community.
Yes.
And I did Sir John Templeton. And he said, one of the things I think I said, listen, if you just go look at the industries that have been beaten up over the last 3 to 5 years, you'll probably do pretty well buying in those industries because there's secular shifts. Are they permanent? I mean, I'm not sitting there saying go buy the pager industry because it's down. I mean, there's a big shift from
BlackBerry and BB
yeah, these have replaced the pager. But things like iron ore and commodities that we're going to use forever, there are shit. Lumber prices have been insane. They've gone up several 100%, collapsed 80%. So these are the things to look at. So Vale, I would just look at it from a long-term perspective. Don't look at the 8 pillars and say, oh, 8 pillars, I'm buying it. Where are iron ore prices now versus history? Where is the revenue now versus history? Do I want to own this company?
Do you want to stock analyze Vale?
Not really. Because, well, I mean, we can. Let's do that. Let's do it. I just don't know where iron ore prices are going. Let's say they fell 2% a year. Let's say they grew 2% a year. Let's say they grew 6% a year.
And it could, any of those could, you don't know where the prices are going to go, with the commodity. So
I'm just going to do 7, 9, 11%. And I'm going to do 8, 10, and 12 multiple, 12.5% return. I bet you this is going to look pretty good.
Probably.
Oh,
wow.
Not even looking good there. That's conservative. I was conservative. It's a little bit above the highest level of 6%, but 6% growth over 10 years means iron ore prices basically double from this last year. Okay, maybe they do. I don't know.
Are these all-time highs of iron ore?
No, we're off the highs. We're close. The all-time highs were just recently.
We're kind of okay. Yeah,
but it's still pretty high compared to the average. The average was 117. Maybe not. What was the average? We can probably find out. But my guess is right around here.
Yep.
So this is only 15 years. I would be cautious whenever it involves any business that relies on a commodity price to generate revenue and profit.
How about Pfizer, Paul?
Good old Pfizer. I can't believe it's a
8 pillar stock.
8 pillar thriller. They just announced earnings yesterday, and they crushed it, didn't they?
Yeah, they announced on Tuesday.
Oh, Tuesday. Stay Thursday. Noted.
Let's see.
8 pillar stock. Thing I'll say about Pfizer is COVID's really driven a lot of revenue and profit for them. Is that a sustainable thing forever? I don't know. Look at that revenue. 40, 41, 43, 81. I'm avoiding. I just don't see that sustainable. How did a company like Pfizer double its revenue in 1 year? It's driven by one event and one event only. That's it.
The one thing I will say about Pfizer is looking forward after the COVID stuff kind of settles down and moves out and they go back to normal, they're they are the viral drug company of the world.
Correct,
so,
but you cannot assume.
Of course not. I would, if it was me,
$22 billion in profit for this company.
Yeah, if it was me, I would let all this die down. Maybe it takes 2 years and then reevaluate.
Yeah, that's my thing on Pfizer. I'm not saying you'd ever want to make it just like Peloton. Go look at our past Peloton videos. I said, is this growth sustainable, or is it because people stayed home and had to buy a Peloton, and then all of a sudden the price falls 80%? This is not a coincidence. Just think like a business person. If you were looking at a business where they were driven a lot of revenue from COVID and COVID's going to decrease over time, Fauci just said yesterday that we think we're out of this thing this year. Okay, does that mean we're going to have no COVID vaccines ever? No, but are you telling me that that their revenue is going to stay up? Their profit's going to stay up? They've done 20-some billion a couple times. Mm-hmm. They've done it a couple times. Great, awesome, good for them, but not consistently. This is a company that you want to look at long-term and look at their pipeline. Make sure their pipeline of drugs coming to market are marketable and good.
If you're interested in trading these stocks at a quicker pace, you can join Mo in the Bid and Ask Nation, that trading tier of our community. Mo, what's going on over there?
So guys, this is Pfizer right now, and we'll just take a look right here. Here you have kind of a head and shoulders pattern that kind of developed, and another head and shoulders pattern. So head and shoulders, what that means is it's a bullish signal. So once you get a peak here, smiley face, shoulder. This typically means that you're going to get some kind of downward movement, and it's going to probably come to this 42.50 area, coupled with a massive downtrend that you have. So as with Pfizer, you have the negative sentiment that could come out against them. The vaccine is done or what have you. So that can definitely affect them. If you do drop below this 200-day moving average, this 100, then this 200, you have a decline to that $40 number that I said. Now, for day trading, I would come over and look at Vale. This is one of those stocks that is very volatile, and you get daily movement on it. You see, this is going to Monday. You had the entire afternoon where you had excellent buying volume in. You had a buy signal right here. Your stochastic was over 80%. You could have rode this through the afternoon. It did fluctuate a little bit on Tuesday, Wednesday, whatever. I don't know what day it is. Anyways, today you actually do have a buy signal. You had a big chunk of volume right there, engulfing candlestick, and now you're just going to see if this thing can stay above 80%. So out of these three, I would pick Vale to be the one to day trade, and Pfizer would be my one to look at for a short position on a long-term chart.
If you want to learn more about our 8-pillar process, click the card in the upper right-hand corner. It will show you every step we take to get these numbers, and our software, of course, can calculate it for you. So, Paul, in the end, what do you think about these 3 8-pillar companies?
So this is just proof that just because it's 8 pillars doesn't mean you buy them. I only bought one. I only have one of them. The other 2 I just made I'm not interested because I just don't get it. So don't just look at 8 pillars as your final. It's telling a story. Does that story make sense to me? Does it make sense for the future? And then go make a decision.
That's a take. Final thumbs up. See you next video. Thanks for watching.